everybody's trying to figure out where things are going to land, but the opportunity for the buyer is to talk to as many people as possible and figure out who's got the urgency. Is it someone with a maturing loan that they got to get rid of? Is it somebody who's got their own equity tied up in a deal that they need to redeploy? What's the story? And that's what we try to get to the bottom of.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Landon Dory runs a full-service 1031 exchange platform helping legacy owners of investment real estate transition their portfolios into long-term corporate credit triple net properties. His average client saves over $200,000 per $1 million of invested asset value. Landon, welcome to the show.
Thank you for having me.
Pleasure's mine. Landon, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Absolutely. So I started this career about 7 years ago doing net lease investment sales for a big national firm. I did that for 3 years, learned a lot, and then took a role. I was tapped to take a role to do that same thing, but leading the Texas division for another national company doing the exact same thing. And then back in January, which leads us to where I am today, I was tapped again to run that same platform for a growing firm called Partners, which is where I've been for about a year now.
Okay, that's a lot of transition there, but I love the growth trajectory. What does Partners do today? I know we've talked about that a little bit there in the bio, but I'd love to hear some more color to that.
Yeah, so Partners is a very impressive group of guys. It's got about 200 professionals in each of the 4 major Texas metros. There's expansion plans beyond that are already underway, but they do everything. I'm specifically on the investment sales side, but we've got investment sales, tenant rep, landlord rep, development. We've got a fund with, I'm going to fudge the numbers here, but a couple $100 million in AUM. We've got valuation, project management, property management. I mean, they've got their hands dipped in a lot of different buckets.
Yeah, it sounds like it. And where does the 1031 exchange fall into that those buckets?
So it fits in very nicely. And that was a big attraction for me in coming over because prior to me joining the firm, there was no net lease experts or really even brokers with any familiarity in that space. So I was the first in the firm of 200 people to bring that expertise in. And as I have learned over the years, there's not many longtime brokers who really understand my industry and the specialty. So in a couple of roundtable firm-wide conversations, I had an opportunity to present what I do and the 1031 exchange service that we offer and why it's different than what most people are probably used to. And in a very short amount of time after that, I had multiple people reaching out from different investment sales product type, be it multifamily, industrial, even self-storage, who said, "Hey, I've got a client who you need to talk to because the situation that you're talking about is exactly where these guys are, and they could really benefit in talking from you." So
what do you do that's different on a 1031? We've had several 1031 exchange providers come on the show and talk about 1031s and how they function and what they do, but it sounds like you guys do something a little bit different than maybe most 1031 intermediaries do.
It's different. So I'm not a QI. I want to make that distinction on the front end. So I separate that from my business. We're exclusively on the broker's side. So in simplest form, we work with owners of a certain type of property, work with them and walk with them through the 1031 exchange process and get them into an investment vehicle, which generally refers back to my specialty for over the last several years, which is net lease investments.
Okay.
That's not complex. That's not new, but there's some statistics that might blow your mind on this. So 30% of 1031 exchanges fail every single year.
Right.
And when I say fail, it means not completed, timelines weren't met, properties weren't identified, all the regular reasons, all the things that add stress to that 45-day window. Yep. And then on average, the commercial broker in the United States only touches and sees 2.1 1031 exchanges in their entire career, which is not even close to enough to be an expert in anything. So, which would account for a 30% failure rate. So we started to recognize this and realize this is a pretty big gap that needs to be filled. And most people who are investors of any type of real estate, our primary and core focus is our investment real estate. So multifamily, self-storage, anything like that. owner user facilities. So if you've owned your own building for many years, a good example is a gentleman I'm working with out of San Antonio who has a large personally owned shipping company. So he's got a big warehouse, a lot of docks, a lot of bays, and he does commercial and residential moving, and then landowners. So all those different three buckets will be faced with a decision at some point in time, and that's to either sell their property and pay the taxes or continue holding the property, which if it's a management intensive property, then that gets more and more laborious over time. Statistically, as you get older, your property value does not keep pace with the appreciation of properties around it because it starts to fall into disrepair. The same is true for the business owner. If they've owned their real estate, now they're retiring, they're getting out of the business, they don't need to own it anymore. And it's unfortunate that there's not a lot of people who have a deep understanding of the 1031 exchange. There's a lot of bad information out there. But what's even more unfortunate is people don't understand there's really good vehicles that you can jump into to preserve your equity, not have to pay the capital gains tax, and then give yourself a cash flow that's in most cases going to outlive you, and it's going to be something that your heirs take on once you're gone. So our target client is somebody who's generally age 60 and above and has owned a property that fits one of those three verticals for longer than 20 years. Someone who's age 60 and above is generally thinking about retirement and or estate planning. And if they've owned their property for that long, they've probably got a low basis in it. So the conversation with their CPA is pretty jaw dropping when they realize what they're going to pay if they do have to sell it.
Right. Okay. 2 questions on that. I want to hear what the good vehicles are, because you used that term. You said good vehicles, not a lot of good vehicles out there. So I want to hear what your good vehicles are. And then I forgot my second question, so maybe it'll come back to me while you answer that one.
I bet it will. So there's 2 primary vehicles that are eligible for a 1031 exchange. It's an investment property, fee simple ownership in something. What I focus on and what is most common is single tenant triple net properties. About 66% of net lease properties across the entire country are owned by private investors. So it's a vast majority. So that's one. And then DSTs are another option. I know you've had some DST folks on the pod. Of course, I'm biased, take this with a grain of salt, but I'm not too keen on DSTs because they typically have lower returns. You get feed to death. You've got long lockup periods. If you do need to get your liquidity out, you're selling at a discount. Whereas with fee simple ownership in say a CVS or a Dollar General or a Walgreens, you could buy it and then sell it the next day. I mean, you wouldn't want to do that. It'd be expensive, but you have that flexibility and you've got that. And then what makes a property in that space good? That's on a property by property basis. There's a lot of deals out there that the fundamentals of them just don't make sense. And the unfortunate reality, and it's kind of why I do what I do, is I've seen a lot of people making first time investments into this space, or they are transitioning their equity and their net worth from one asset into this, thinking they've got a passive cash flow. And they completely ignored the fact that their rents are 150% higher than market, or their tenant has a short-term lease, or it has roof responsibilities, or there's a rent reset. So there's a bunch of different nuanced things that could go wrong, that if you're just looking at 50 net lease properties on LoopNet or on Crexi, all you see is a price and a cap rate, but it goes so much deeper than that. So where we step in with this process is heavy on the education side. We show people what to look for, what to watch out for, and show them basically what types of properties are going to be secure for you, that's going to fit your return profile and your risk profile, and it's going to give you what you want for as long as you've got the asset.
I like that. That's great. I mean, this is a question probably that many active investors and active deal sponsors wonder about, but how do you get in front of people that have 1031s? I mean, it's one thing, to have somebody approach you, but how do you guys actively find people that say, hey, look, I need to, get out of this or find something for my 1031?
It's a good question. And I'll tell you, it's been a little wild because this has been a small piece of my business over the long term, but as we've started to really go into it, we've recognized the demand. Almost all of our deal flow in this area has come from word of mouth. So when I give you that hyper specific profile of someone, 60 years or older, has owned a property for this period of time, knows they're going to sell it at some point in time. If you are Sam, who knows investors who fit that criteria, if you are a broker who is maybe a multifamily broker, you're trying to get somebody to sell their property and this offers them a good future possibility. CPAs, financial advisors, attorneys, everybody knows that person. So when I give them the quick pitch, like we're talking about here, it's usually a very short conversation between that and, oh, you need to talk to Margaret. We just had the same conversation last week.
Right. No, I got it. And that answers that question pretty clearly. Here's a question for you on triple net properties. And this is something that I have not yet been able to kind of get or wrap my own head around. The return profiles are typically muted because they're triple net. And I mean, maybe you can tell me why I'm wrong, but in a period of I'm going to call it hyperinflation because I personally don't believe that the published numbers are anywhere close to like actually what's going on.
Yeah, I think we're on the same page there.
How do you protect yourself in these investments? Let's say they're 60 plus and you put them in something that gives a 5% annualized return. I mean, how do you combat that?
So with most of these triple net properties, they've got long-term leases and they've got rental escalations baked into the lease. It's been common over the last couple of decades where inflation's been under control to see those of 5 to 10% increases scheduled in every 5 years. If you go back as far as like the late 70s, early 80s, when inflation was really rampant, that was more common to see leases tied to an index like CPI or LIBOR. So you could have as much as a 6% rent growth over the course of a year. Nowadays, I'm starting to see more CPI clauses in lease, so that's catching up to it. But it's either a CPI increase or scheduled increases that keep you close to inflation. Now, you're right, inflation's getting crazy, so we're going to see a lot more CPI or even higher annual escalations, which has been more common. But yeah, that's pretty much it.
Yeah, and that doesn't surprise me at all. I mean, because investors aren't stupid, and you start seeing just the disparity between what you're getting over here and then the rising inflation. It's like at some point those leases are all going to start cycling, like you said, back to a CPI plus, maybe more way of writing those up. So that's a great answer. Appreciate that. Tell me this state of the market. Where do you think we are right now? What's happening in the triple net lease world? Where are we?
Well, I can tell you that everybody is trying to figure it out. Anybody that tells you they know one thing from another is probably selling you something. So I can tell you what my experience has been. And it's been that if we looked back as far as January, it felt like there was 5 buyers chasing every one property. Hyper competitive, things were trading at or above list constantly. Once these rate hikes started kicking in, it basically eliminated any buyer needing financing from the buyer pool. So now it's all of a sudden one buyer, or I think I said that backwards. No, I got it. So it's one buyer for every 5 deals. So you've got a lot more options in what you're doing. And I can give you multiple examples of this, real-time examples, but there's properties that have been listed. And if we look at the listing date or the last updated date, you can see where the pricing is today versus where it's been. And there's been a lot of price reductions. But in the instances where there are no price reductions, let's say let's use Dutch Bros coffee because those things are getting pumped out like crazy. They're kind of hot. Everyone's familiar with them. People have been asking a 4.5% cap rate on those. And now you can get a T-bill for that same return. So that doesn't make sense. But what we've seen is when we actually engage with the brokers and engage with the sellers, show that we've got real equity coming from a 1031 exchange, show that we're serious, that we've got a timeline, all that stuff. The person selling that property, which is generally a developer, has to make a decision. And they either have to decide that the market is going to get better and that they're going to get a price closer to that they want, or that the market is probably going to get worse and they need to make a decision whether or not to sell now. Because they've got either a bridge loan or they've got their own equity invested in these properties that they need to get out so they can reallocate into new projects. So we've seen, I think one example was a deal in DFW. We got the selling broker told us that there wasn't any more than 25 basis points worth of movement on this. By the time that we made our offer and got a response back from the seller, we got the property tied up under contract at 150 basis points higher than the cap rate that that the property was originally listed for. So point is, there's a lot of movement out in the market. Everybody's trying to figure out where things are going to land, but the opportunity for the buyer is to talk to as many people as possible and figure out who's got the urgency. Is it someone with a maturing loan that they got to get rid of? Is it somebody who's got their own equity tied up in a deal that they need to redeploy? What's the story? And that's what we try to get to the bottom of.
Right. No, that makes a heck of a lot of sense. And yeah, that's just where things are right now. And I got a question for you as it pertains to the complexity of 1031 exchanges. From my understanding, and I personally have actually never been through one, but there's a lot of different people, a lot of different hands in the pots. It seems like,
talk to the brokers. Oh yeah, 1031 exchanges are easy. And that's not the case. So we bring as much of that under one roof as possible. And we actually quarterback the entire process from start to finish. My team, I can guarantee you, is much more equipped to that than any broker that doesn't specialize on this, and especially any owner that's never gone through this before. So we can bring that under one roof. We quarterback and spearhead it. It costs the exact same as if someone was to do it themselves, because we get paid based on brokerage fees and nothing else. Right. I can't, and for that reason, I can't stress the education piece nearly enough. And that's what we prioritize more than anything. It's education about the exchange process, and it's education about the properties, because they're just deceptively simple in nature, but they're very complex once you get behind the weeds. And another area that we spend a lot of time in is maintaining our relationships with off-market inventory, because about half the time one of our clients will purchase a property that's listed on the market, but the other half of the time it's coming from our network of either developers, other brokers, our own private client database, or even REITs and funds. Like, we'll pull deals from there. So we can not only educate people more appropriately on these deals and what makes a good deal, but we can get access to more deals than anybody else. I can almost guarantee that.
Right. No, I think that's really cool. And having that capacity and having that deal flow available. I mean, that's one of the biggest problems. I mean, there was somebody recently that came to me and said, "Hey, I've got X number of dollars, but it's got to close by this date. Can I 1031 into one of your properties?" No, this didn't close, and we think we were closing 2 weeks later than what they had to have. And it's like, that was our last deal for the year. And I go, okay, well, I'm sorry, but I can't help you with this. Sorry, I can't take your money, which is always a bummer to say when you're raising capital. But to your point, I mean, having those opportunities where it's like, hey, here's 10 different ways you could deploy these funds through your 1031. That's really, really powerful, I think, for the end user. So absolutely fantastic. Landon, I've learned a ton from you today. Certainly appreciate taking the time to come on the show. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, well, thanks for having me on. I'm a longtime listener, so it's a pleasure to actually to be a part of this, something special. And I'm pretty easy to find. I'm on LinkedIn, on Twitter. I've got a YouTube channel, which is my way of artfully trying to educate the people on what this process looks like. So even whether or not we do business with someone, people can be better informed. My email is pretty easy to find, but it's landon.dory@partnersrealestate.com. And it's probably enough to get a hold of me if you need me.
That's absolutely right. And for those of you who are listening, that's Landon, LANDAN Dory, DORY. So look for the spelling on that, LANDAN Dory, DORY. Landon, thank you again for coming on the show today. I certainly appreciate it.
Thank you for having me. Enjoyed it.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.